Welcome to AI in 8 minutes or less, your daily AI update. Today, we're diving into a seismic shift that's happening just under the surface of the markets. It looks like the small investor is vanishing, but what's replacing them is bigger, faster, and, well, it's not even human.
You hear this sentiment everywhere right now, this feeling that the everyday person has just packed their bags and left the crypto space. And you know what? When you look at the data, it's not just a feeling, it's a cold, hard fact.
I mean, check this out. Retail activity, which we can measure by how much money smaller investors are putting into Binance, has totally cratered. The 30-day average is now just 332 Bitcoin. That's an all-time record low, and it basically confirms that retail is completely MIA.
And the mood? It perfectly reflects this. The crypto fear and greed index is stuck at a 9, deep in extreme fear. Seriously, we have never seen it this low for this long. The small-time investor has clearly left the building. But here's the twist. While they're gone, a new player is quietly taking over the entire game.
All right, so let's get into it. It turns out this quiet market isn't empty at all, not even close. It's actually humming with a totally different kind of activity, one that's way faster and a whole lot more logical.
Let's just put a number on it. On a massive network like Solana, a staggering 85% of all trading is now being done by automated AI agents, or bots. That's right, actual humans only account for about 15% of the action. So how are the bots winning so decisively?
Well, it's pretty simple, actually. It's because bots and humans are playing completely different games. Bots are just pure, ruthless logic. They hunt for the fastest, the cheapest, the most efficient solution every single time. They operate in milliseconds. Humans? Oh, we chase stories, emotion, hype, and whatever the latest shiny thing is.
And please, don't make the mistake of thinking this is just some weird crypto thing. As AI expert Andre Karpathy puts it, everything is going agentic. That means our entire world is being rebuilt from the ground up to serve these AI agents. This isn't just a market shift, it's a fundamental rewiring of everything. And that leads to an even bigger story.
The bot activity we're seeing, it's really just the tip of a colossal economic iceberg. To really get what's going on, you have to look at the numbers coming out of the AI industry itself. And honestly, they're almost hard to believe. So let's just take one company, Anthropic. They're projecting that their revenue is going to hit $100 billion by the end of 2026. To put that in perspective, that's bigger than the entire economy of some countries. For a startup, that's just insane. But wait, it gets way, way bigger.
Because just 1 year later, by the end of 2027, they expect that revenue to 10x again, hitting $1 trillion. A 10x jump to a $1 trillion valuation in a single year. That would make it one of the biggest companies on the planet, period.
And just think about the implications of that for a second. A single company is planning to spend $1 trillion in 1 year, just on the raw guts, the infrastructure needed to run its AI. All that money flows straight to the guys building data centers and chips, but all that hardware brings up one critical and often forgotten question.
Because all of this AI compute, this entire $1 trillion gold rush, it all depends on a staggering amount of one very simple, very physical resource: electricity. And this, right here, is the bottleneck. Experts are now forecasting that by the end of this year, we're literally going to have more AI chips on Earth than we have available power to turn them all on. So, the crucial question becomes, who has the juice?
And the answer is pretty surprising. It's Bitcoin miners. I mean, think about it. These guys have spent years building out this massive global energy infrastructure for one single purpose. Now they're realizing they can just pivot and sell all that power directly to AI data centers who are absolutely desperate for it.
So, while this one economy, the one built on AI and energy, is just rocketing to the moon, the traditional economy, the one most of us actually live in, is telling a very, very different story. Let's start with something basic like buying a house. Back in the 80s, the median age of a home buyer was around 30 years old. Today, it's all the way up to 59. 59. That's a huge indicator that things are getting way less affordable.
And then you look at the job market, which is weakening in this really sneaky way. We see these initial positive reports, but then, a few weeks later, that quietly get revised way down, revealing pretty significant job losses. It's a subtle but really consistent trend, and it suggests the foundation of the old economy is starting to crack.
And this split is creating the most important question we all face. The big takeaway here is that we're watching two parallel economies emerge. One is automated, logical, and accelerating at a speed we can barely comprehend.
The other, the human one, is facing some serious headwinds. The question really isn't just about markets anymore, it's about which economy you're prepared for. If you enjoyed this, subscribe to AI in 8 minutes and never miss what matters.